In this price action trading lesson, we will be trading a consolidated market with a bullish bias. So you will witness how a structure like this is going to be developed. And as a price action trader, my goal is to identify high probability setups at key entry points. And if I want to identify these high probability setups correctly, I need to follow price action rules. Now, one of the price action rules is trendline rule, which says after break of a trend line, I expect for prices to test the new extreme. And we have perfect example during the overnight session. Now, this is the structure that will happen during the overnight session before the regular US stock market will open. We can see we started with bullish trend. There's always a channel present. We have a large two-legged pullback. We have a second entry long, great signal bar, and also failed breakout out of this congestion. Why are we thinking bullish? Because we need to get the new high. After new extreme is formed, we expect correction or reversal. Brand new downtrend started. Count reset at the low. First entry short. Second entry short, another two-legged pullback at the key entry point, new low was formed, consolidation into reversal. So this is what we're going to be looking for, identifying the correct channel, the overall structure, and the high probability setup. I can right now see that we have bullish channel that has a break in new high. But what I'm going to do, I'm going to make the channel wider. Why am I making the channel wider? What is the incentive? Well, first of all, I can already see slight bullish bias because every single low is higher than the previous one, and we can see that we have break new high and we haven't touched EMA prior, and this is looking like one steep leg, instead broad two legs. So this tells me there is significant bullish momentum. I'm going to widen it just a little bit because a lot of times you have a break new high without touching the EMA, there is additional push to new high. I would like to see second entry long, but I only have first entry long, which is not a high probability setup. Now, we talked about price action rules. This is how we navigate the market. But it's not the only thing I can use if I want to identify the high probability setup correctly or what the market is doing overall. I can also use the measured move price action tool. I'm going to measure the first leg, and especially if you go on 10,000 tick chart, which is a higher time frame, you can see the clear two legs. I'm going to measure the first leg and I'm going to project where the second leg is probably heading. This is how you can project the target, because these two-legged pullbacks are a lot of times measured. It doesn't have to be perfect, but very close. And price action keeps pushing higher, and notice we are about to reach the measured move. Now we have a break, new high. I can even draw a channel a little bit wider just to follow the price action better. I have a break new high and market keeps reversing all the way down. So two-legged pullback played out. We're pushing below EMA, which is signaling reversal. I'm going to draw a wider channel because I expect reversal. Now if I want to sell structure like this, what you want to see, I would like to see felt second entry long below EMA reversal pattern. Okay, I don't think lower high is good enough just yet. Can we get a reversal pattern? We have a felt second entry long, but it's so far away from EMA, we cannot really take it. It needs to form much closer to the EMA. We are breaking the downtrend. We expect new low. We have a second entry short, but notice how far away we are from the key entry point, from the EMA. And also you can see that the signal bar itself is not really that good. So I would need to see better setup closer to the EMA. It never formed and we already created new extreme. We technically have micro level bottom, which is not fully new low, but once I see price action pushing so strong above EMA, I'm gonna think, okay, sellers, consider this break and double bottom as new extreme attempt. I'm gonna adapt. And what is the overall structure right now? You can see it's not easy to identify the bias. There is no clear strong uptrend or downtrend, and when you can't identify clear trend in either direction, you're probably trading some form of a trading range. So what I'm going to do, I'm going to draw the support, I'm going to draw the resistance, and I'm going to go back to following shortened channels because that's the only thing I can do. I was expecting new high for this uptrend, second entry long, but it never formed. Market continued working lower, and notice market created the technical new low for our first initial leg, and I can also measure it and kind of project it. Can we get the measured leg? We're very close, but price action keeps reversing. Measured moves, they don't have to be fully perfect, especially if you already have new extreme. There is not enough momentum because this downtrend has a break new low. Sellers are taking profit, so just because we didn't hit it perfectly, that's still okay. You can still see visual two-legged pullback, and I can still consider this downtrend over. Now that we're reversing back above EMA, once again, I always want to have these moves under control. I want to know what the market is doing, and where it is heading. And I can do this by following these channels, shortened channels. So here, we're breaking the channel. So what are you expecting? First of all, I'm expecting new high, okay? Because this channel has a break. In order for me to buy, I want to see two-legged pullback, second entry long. Can we get it? And we only have first entry long, and we have new extreme again. New high. We're close to the resistance. I'm going to redraw a shortened downtrend. This downtrend is in play. I cannot go long as this downtrend is in play. You're not full at the EMA anyway. Now, can you sell? You cannot sell because you already have a break and new low for this downtrend. But here it is important what you have to do. You want to periodically, during your trade session, zoom out to reinforce your analysis of the overall structure of the big pattern. What is the big pattern telling us? Well, we can see that structure is not clear, so this is consolidation. But every single major low is higher than the previous one. And this is crucial. This is showing us some form of a bullish imbalance because we keep slowly but surely trending higher, which means in order for me to sell, I would really like to see a good setup or proven downtrend. I'm leaning more bullish overall given the imbalance. And here, since I can see break new high, second and third leg up, which is a lot of times what's not going to happen, you get one or two legs up, there's a chance for me to draw this spike in a channel. But I have to be a little bit careful because I'm also at the top of the trading range. So this is where context is unclear. You have conflicting patterns and that's normal. If I'm watching this, if I'm deciding between this key level or the spike in a channel, what I like to see is push above EMA as some high-low confirmation setup. We actually have some form of triple test here. You can see kind of like a one bounce, second bounce, third bounce. This was very tempting because downtrend played out with the break new low. There's a horrible bar you cannot go long above, and it's such a great tier 1 signal bar. You know, I can market more aggressive, triple test. This was really tempting setup because you know that sellers must have been trapped here. This is kind of confirming the spike kind of channel. Ideal would have been high-low above EMA, which you cannot get because you already have a break and a new extreme of the spike kind of channel. And because this is a consolidation, I expect market to correct or reverse right now. We have strong push below EMA. We have a lower high that didn't trigger, but I cannot take anyway. And notice what we have. We have counting from this high, first attempt to go long, pull back, second attempt to go long, failure. And counting from this low, first entry short, second entry short. We have two high probability setups in one, uptrend played out. And because we have two high probability setups in one, this is a second entry short, failed second entry long, great high probability setup. Tier 1 signal bar right at the EMA. It is a little bit stacked, but because we're at the top of the consolidation, we're really most likely going to continue working lower. I'm going to redraw the shortened downtrend. I have only first entry short, and now I have another form of a triple test. One top, double top, triple top. But this downtrend already has a break and a new extreme, so this is a concern for me. I cannot market fully high probability setup. In fact, this is way more advanced than a developing trader would want to consider. I can market more aggressive because I know that more advanced trader understand what's going on here. But because you have a break new low, you know, you gotta be careful. This can be a little bit more aggressive, but it is a triple test. It is a great signal bar. You're most likely gonna continue working lower. Okay. We have a break new low. I need to redraw a shorten uptrend. We have a second entry short, but I cannot take. First leg up, second leg up. Now, when I was watching this is where I assessed that there could be wider channel because we have a break new low and so many pushes to new extreme. I was thinking about possible spike and a channel like this. But the second entry short we have is an inside bar. And the inside bar is not ideal when the structure is not really that clear. We have shortly after a lower high confirmation setup of the second entry short. So this confirmed the second entry short, the two-legged pullback. And when I'm watching this, it even confirmed the wider channel. So this is decent lower high confirmation setup of the second entry short. It worked for a scalp. You can see 2 3/4 of a point. So quick, easy scalp. And as I can see market reversing all the way back up, retracing too much. This is where I have to ask myself, okay, the retracement is too deep. I need to adapt. So I need to delete this and now focus back on bullish. So I'm going to zoom back and see that the structure is not that easy to trade. It is a consolidation, but it is bullish consolidation. Once again, this low is higher than the previous one. So we are slowly but surely creating higher lows, bullish imbalance. Important thing for me now to recognize, the bearish trend ended. The brand new push phase is beginning. I have my channel. I'm following the price action and I want to see two-legged pullback, second entry long at the key entry point. I have a new high, first entry long, pullback. I was ready to go long here, second entry long, but it never triggered and EMA didn't hold. So I had to scratch the idea because there was no break above this bullish bar. So second entry long never triggered. And also I can see that we have small trend range where I can also kind of like a reset the count. We have so many matching highs. So I can actually treat it as a first entry long and here second entry long. Now you don't want to go long here because EMA is not holding. This setup didn't trigger, something telling you, okay, why didn't trigger here? I can create short and downtrend. Now this setup was extremely tempting, very tempting setup because so many sellers are going to get trapped. Why? Because this uptrend needs to get new high. Remember the trend line rule. We want to see new extreme. You don't want to be shorting, but we close below EMA. Had we closed above EMA, this would have been better. This is more gut feeling based trade. Second entry long with count reset. I really want to see high low above EMA to confirm it, and it never formed. A market already created the new extreme. I'm going to redraw a short and downtrend. We're pushing back above EMA. I don't see any setup. I'm going to redraw short and uptrend like this. Now I can see that we have brand new uptrend, break, attempt to create new high. Once again we have small support and we have visual two-legged pullback. First leg down, break, second leg down. So this is a visual two-legged pullback. You're at the bottom of the trend range. It didn't trigger below this bearish bar, but I am going to mark it. I was on my break here, so I wasn't trading here. But at this point, you can see the bullish bias is so strong. The sellers are getting squeezed. You're going to continue working higher. If you're going to zoom back, you can see how the bearish push phase is smaller and smaller. You can see here we had deep bearish trends and suddenly they're getting smaller and smaller. So this is telling you that the trend is eventually going to break to the upside. You have support, you have visual two-legged pullback, so you can take visual second entry long. It was good enough for a scalp. It managed to get, you can see, over 2 points exactly for you to get out. Now there was even a high-low confirmation setup. If I'm going to take a look, you can see you have a high-low confirmation setup. I wasn't watching this. At this time, it's a bit stacked, but once again, I am going to mark it. It's not a horrible setup. If you took a chance here, I can see why. Unfortunately, you would have gotten stopped out. But it's okay, that's part of trading. The stop is fairly small. This bar is not only 2 points. I can see it at the top here. I'm going to just hover over the mouse. You can see 2 points, not even that. The stop would be 2 points. So I can see if someone would took it. And now we have quadruple bounce, great bullish bar. We need to get new high. All the sellers are going to get trapped. So this is the ultimate setup you want to take. And market continues working here. So we have a bunch of setups here. Visual two-legged pullback. This channel needs new high. EMA still keeps somewhat holding and this support is important. The bullish wedge is going to break higher and this is a great setup because you're buying low at the bottom of the trend range. Because what you can do, you can draw a small trend range like this and you can see why this high low failed because it was just too close to this resistance, but it's worth enough to take a shot. And this setup, you're buying at the very bottom with plenty of room to get out for a scalp. The bullish bias continues. Every single major low is higher than the previous one. So what I'm going to do, redraw a channel like this. At the same time, I'm going to respect the short-term downtrend, short-term correction. You can see the downtrend is in play. We have a break new extreme. And now what am I looking for? High-low confirmation of the two-legged pullback or failed second entry short because this uptrend right now needs to get new extreme. And you can see as the price action keeps developing, you are able to identify the proper channel. At first, you only have to work with the short-term channels because you just don't know if there's a bigger pattern. You don't have access to bigger price actions just yet. But the institutions, the high-frequency trading firms, the big players, they are unfolding their cards. You're following their footprints, and you can see that this wider channel has been developed, fits very well. You expect new high, you combine it with the bullish imbalance, and we expect the price action to get new high. Now, I have a new high, I have only a first entry long. This is a new low. First entry short pullback, second entry short feather, but I wanted to see EMA holding, and this is where I wanted to go long. New high, first entry long, second entry long, part of the failed second entry short, this would have been absolutely great setup. Look at the signal bar, but it never triggered. It never got the break, and market eventually continued working higher, creating the scalp. You can see you still would have survived the initial failed second entry short, but I was excited to go long here. This would have been perfect setup. EMA keeps holding. Unfortunately, it never got triggered, so there's no way for me to take it. I just have to wait and see market correct. It was good enough for a scalp. The bias still remains bullish because I want to see the main channel to create new high. You break new extreme. You can see always follow the channel. There's a reason to price movement. Only after there's a break new low, the market can correct and buyers will stop buying again. Push above EMA. We have a second entry long, two-legged pullback. We still expect new high, but the second entry long is below EMA. Headed form above EMA. We can go long, expecting new high, and perfect price action keeps working higher. New high was created. You have a new high for a central long, second entry long. You cannot go long, especially after new high of this channel. But now you have great high-low confirmation setup of the two-legged pullback. We have a high-low here, confirming the two-legged pullback. It is a great signal bar, great setup at the EMA. It closed higher than the second entry long, but it's already way too late. The market closed. So the best setup form at the later stages of the day. So this was a bullish consolidation, bullish imbalance. Every single low is higher than the previous one. Price action is very predictable. It was very predictable today because the channels and trendline rule applied perfectly. You can see you just follow the channel to the downside, break new low, and once it's pushing above EMA, you're looking to go long again. Even these bullish channels played out perfectly. And overall, as you are at this area, this is where you can see the sellers are really getting squeezed. The bearish correction phase is smaller and smaller. And this tells you that there is a brand new channel working higher and you are still thinking bullish. Couple of good high probability setups. They didn't form that well in the best setup form this late. So I hope you had a good trading day. I'm going to wrap it up and good luck with your trading. Take care, everybody.